Here we go, and we're live. Holy cannoli, what a week. On Wednesday, we had the Fed meeting. We had major earnings report this week. Markets have been whipsawed around, and we said yesterday, today's job report will be the report that makes or breaks the market. And it's breaking the market. Holy cannoli, what a bloodbath today in the market. So we'll take a look at what happened here, what's happening, and what to expect going forward. And with that said, welcome to Coffee with Markus and Mark. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And today is Friday, August the 2nd. And I don't even know where to start. I think we need to start on the heat map to see what is happening today, Mark.
Yeah, I think that's a great place to start because it is mostly red. And that's exactly what's going on in the markets. A couple of stocks standing out like a sore thumb, a green sore thumb that would be, but the rest of the market just down.
I mean, and every sector is getting hammered. Nvidia down 4%, Broadcom down, Microsoft down 2%, Google down 3%, Meta down 2.6%, Amazon down almost 11%, Tesla down 3%. We have banks down with JP Morgan down 4%, Bank of America 4%, Wells Fargo almost 7%, American Express. So, oh my gosh. Okay, let's go back to the S&P and let's take a look at what happens here. So much for the 50-day moving average holding as support. Boom! Slicing right through. Look at these markets. Dow down 2%, S&P down 2.5%, Nasdaq down 3.1%, and the Russell down 4%.
Yeah, and this time it is not a sector rotation. We see the red across the board, but then the Russell just shows that this is overall selling in the market. And right now, the focus has turned to the economy and weakness in jobs, and potentially from earnings.
Yeah, we see the VIX today, the fear index, up 55%, now trading at 30. I mean, what a jump here. So we need to see what's happening. And we know that today was all about the jobs report, the jobs report for April. And it's not good.
Yeah, this is where bad news is bad news this time around. We see that average hourly earnings coming down, and in theory, that might be good for the Fed. But that non-farm employment number, I mean, that to me is the biggie here. You have an expectation of 176,000 non-farm jobs added. Last month, it was 179,000. This time, significantly lower at 114. The unemployment rate ticks up to 4.3. But yeah, that non-farm jobs number is on the low end for sure.
Yeah, and this is where I mean you really have to look at the charts here so that you see this is the monthly jobs creation in the US. And I mean, you don't need to be a genius to see the trend here. The trend is definitely going down. On the other hand,
Sure.
we have the US employment rate, and we do have the employment rate going up. I mean, 4.3, we said it yesterday. If it comes in any higher, the markets will react strongly to this. And oh boy, do they ever do. So, yeah, I mean, this is super bad. So, why are markets reacting to this like this?
Well, this is where uh, before when the Fed was raising rates and the Fed was hoping that the economy might slow a little bit to help inflation, numbers like this would be a positive because traders got excited about a rate cut and the Fed slowing down their hikes and whatnot. But now that a rate cut is right around the corner, the concern is, maybe we've stayed at these higher levels that the Fed has, kept rates at to combat inflation too long, and potentially it's hurting the economy.
Yeah, that's what it seems like because the expectations today for the September meeting are that there will be a rate cut for sure. But look at this 70% probability now of a 50 basis point rate cut. So reducing it by 0.5%. I mean, this is where
That
let's just back off here for a moment and let's take a look at the not at the probabilities, but compare it to what happened. And here's where we see a month ago, there was still a 31 probability that the Fed would not lower rates at all. Then we did have a week ago a 90% probability of a rate cut of 25 basis points, so 0.25. And then today, with this coming in and also the numbers that we had yesterday, the economic reports, now it's exactly what you said, Mark. Everybody now is thinking, oh, gone too far. And I mean, the September meeting right now is another 47 days away. That is a long time.
it is. It is. There's more data. There's more jobs data. There's more inflation data. But yes, will the Fed need to do an emergency cut? I mean, we're way too soon for that. But you never know. It's happened in the past.
Yeah, and I mean, one of the things that happened this morning is that in the Nasdaq, we are now officially in correction territory because the Nasdaq from the highs is down more than 10%. So officially, we are in a correction. And just a month ago, we were celebrating making new all-time highs. And right now, the fear, all right, the Fed might have broken the US economy because, Mark, I mean, if you're looking at this chart here of the unemployment rate, this does not look good at all, especially after Powell on Wednesday emphasized, listen, guys, just to keep remembering you, we have a dual mandate. We need to make sure that inflation is coming down, and we need to make sure that we do have low unemployment. And it seems that they are failing on the second mandate right now.
So not looking too good anyway.
It's not looking too good. So going back to this, I mean, again, overall, just dark red. Apple sticking out after better than expected earnings.
Yeah, I mean, just a beacon of hope maybe here. We have Apple, they reported better than expected earnings. Their iPhone sales were down 1%, but new Apple owners like iPads surged 24%, Mac sales were up 2%. So, all in all, investors liking what Apple had to say.
Yeah. And that's pretty much everything that we have on the bright side because we do have Amazon and Amazon today plummeting 11% after reporting earnings.
Yeah, this is a nasty move lower. They were beating on earnings, but they reported a loss or not a loss, but a worse than expected revenue number. So investors not liking that. But then also there is more competition from Temu, right? And their AWS grew, but lagged behind Microsoft and Google's cloud growth. So that's always being taken into perspective there. They also projected weaker than expected revenue growth and said it would be ratcheting up their AI spending. Investors not really applauding that, though.
No, I mean, increasing spending, that's not what investors want to hear. You want to hear about cost cutting. Talking about
Exactly.
cost cutting, Intel, that's where they're down right now 28% after reporting much worse than expected numbers.
An official bloodbath for Intel. Would you like some wine with your bloodbath? Gosh, Intel, they plan to lay off thousands of employees and pause their dividend payments, which, isn't something that investors want to hear to be a long-term holder. They reported weaker than expected sales. Their earnings per share and revenue was down. And that also carried over into chip stocks.
Yeah, this is why overall, when we look at these other chip stocks, so Nvidia lost already 6% yesterday, losing another 3% today. We can actually go to a daily chart here and just see what it looks like. So if we look at Nvidia, I mean, boom, just ugly. AMD looking bad here. I mean, all across Broadcom, AVGO, down today, what, 4%? So, yeah, I mean, in addition to the weaker economy, now we are receiving these earnings reports, and these are earnings reports from the Magnificent Seven. I mean, we have already heard from Amazon, not good at all. We heard from Google, not good. We heard from Microsoft, not good. We heard from Meta, yay, that was good. We heard from Apple, yay, that was good. So we have one, two, three. We heard from Tesla, not good. Amazon, not good. Microsoft, not good. Google, not good. So now Nvidia is still outstanding, but this will be a couple of weeks until we hear from them. So out of the six Magnificent Seven, four of them not doing well at all. Two of them doing okay.
Yeah. And oh snap! Did you see Snap?
Oh, Snap. Oh my gosh. I mean, poor Snap can't catch a break, right? I mean, Snap, look at this. Whenever you think, okay, they got it now, look at this. They went up, 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 and it looked good. And then there were earnings, and not good and good. Then more earnings. Yay, we're up back again to what, 17-ish, something like this. And then today, reporting earnings again and plummeting 25%.
Yeah, better than expected earnings, worse than expected revenue. They also reported guidance for the quarter that's at the lower end that investors were expecting or hoping for. So, yeah, a big drop there.
So, I mean, let's take a look at our positions. And I mean, it's just one of these days, as said,
Yeah.
bloodbath. So, would you like to have some wine with that? So, Bank of America, first up. And Bank of America down today. And this, again, recession worries. So we are actually approaching our stop loss here in Bank of America right now, trading at 37.85. We entered at 40.44. Our stop loss at 37.20. So we need to keep an eye on this one.
Yeah, it's getting close there, and well, follow the plan.
That's why we have a stop loss in place, right? And this is where we have Honeywell. Honeywell, I mean, looked really good. We're still, I mean, this morning gapped higher. Look at this, pulling back a little bit. Yeah. But I mean, still up 0.5% above our entry. So we'll see if we didn't have an entry signal today, which kind of surprised me. I thought that we would get an entry signal today, but let's see what happens. Really nicely up today, as high as 208 right now, pulling back. Trading at 203.50.
Yeah, and honestly, can't complain when we look at the overall market and what HON's doing.
Yeah. And then we had an exit, and the exit was Walmart. And Walmart, wow, we exited with a nice profit here. And after this, Walmart started pulling back, trading at session lows. But this were... we went long at 68.91, and this morning we exited at 69.60. So nice little gain.
I mean, with what the market's doing, can't complain. Then this worked out perfectly.
Yeah. And then we had a new signal, and the new signal was GM, General Motors. And General Motors gapping lower, moving lower right now, down 4%. And I mean, this is one of the stocks, if we do have a recession, of course, people will hold back on buying cars and new cars, right? So this is where recession fears here right now hitting General Motors. We got in at 42.38, right now trading at 41.50, so slightly below our entry. We'll see what happens with this one.
Yeah.
All right, and then hopping over to the wheel, and here on the wheel, we have CSIQ, and geez, poor CSIQ. You would think that with interest rates moving lower, that CSIQ would skyrocket, but here's the challenge, right? Again, this is a stock that, during a recession, you're not putting solar on your roof. During a recession, you worry about other things. You worry about putting gas in your car. You're worrying about groceries, and not necessarily what all improvements can I do to my house. So this is where today, down 10%, right back here, and we were doing so well. We were on our way up. So, okay, come on back up, little buddy.
Yeah, this one's frustrating because the projected rate cuts, that cycle, all of that is exactly what we want. But like you said, when there are economic concerns, that basically takes away the bonus of rate cuts. So we'll see if the tide turns on this one, but not fun for Friday.
Yeah. Same with Halliburton. Look at this, gapping lower, and this where again. I mean, crude oil. Yeah, this is where during a recession, this is where people say, okay, probably people won't travel as much, so airlines are probably getting hit hard. Production might slow down, which is a huge consumer of crude oil. So this were today down 8.6%. That's a big drop.
That is a big drop. And I mean, crude oil is also down 3.5%. The interesting thing here is this could be an overreaction, and it seems to be a little bit overdone all at once, right? Some money coming out of the market first, going into the small caps and Dow components, and now just coming out altogether going into the weekend. But the challenge is there really isn't a whole lot coming up. We still have some earnings next week, but there isn't a whole lot coming up to change the tide here, unless everybody just gets excited about buying things at a discount. So it's definitely interesting. I still like Hal, and I'm in it, of course. I've done well with the premium that I've collected. I'm happy with the price that I'm at, but yeah, being down 4.5%, it's no fun.
Yeah. We'll talk about this after we review some of our other positions. So, Coles, KSS, after yesterday having a good day, and yesterday overall being up, 3%. Today, down 8%. Also, Coles as a department store would be hit if there is a recession, and these are the recession fears today. Same with UPS. UPS had a good day yesterday, moving higher, and then today moving right back into this range, down 2%, and we're back in the range here between 126 and then 132. So that's where we stand right now. But here's the point, right? So today we also see interest rates are down. We see that the 10-year yield is down 4%. The 2-year yield is down almost 6%. We are now below 4%. So this is where you said, is it overdone? Because think about it this way. So I want to bring up the economic calendar. So what do you do with money? So, okay, you're taking money out of the stock market. Great. And then what? We already learned on Tuesday that the home price index is moving lower. So this could be that maybe for real estate might not be the best time right now to invest in real estate because we were moving higher, 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 higher. Now we see that we are flattening out, and we know that there's a lagging effect. So real estate prices might come down. Okay, so real estate market might not be the best idea right now. Interest rates? No, yields are just coming down. They're crashing today. So you can't put it into bonds or anything like this. And then the stock market going down. So basically, what all of this means with the stock market going down, interest going down, commodities like crude oil going down, it basically means right now everybody is slightly panicking, taking money out of the market and putting it into the checking account. And this is where we'll see. I mean, at some point, money will return to something. You have to put it somewhere, right? And this is where maybe next week investors see a buying opportunity there, especially since we are now with the Nasdaq in correction territory, with the S&P below the 50-day moving average here pretty decisively. Let's just bring it up here. So we'll see. I mean, this is what investors saw when we dipped last time below the 50-day moving average. I mean, it was dipping a little bit more. Probably, let's see. Just a minute. Do you remember what was the retracement last time? So last time the retracement was around 6% in the S&P. Let's see where it is right now. So right now, look at this. We are right at 6%. So it might be that investors are seeing it as a buying opportunity next week. But today, it's get the heck out of here. This is why everything here is bright red.
30-year mortgages are at a 6-month low. Maybe borrowing money gets interesting again.
Maybe borrowing money gets interesting again. There we go. Let's take another look at the S&P and see where we are. Oh, before we do this, I almost forgot. With all this
Hey,
this craziness going on.
Marcus,
Hmm,
Marcus, one
yeah,
more thing we have to look at. BP.
BP. Oh, okay.
Actually,
Good.
there's two things I want to look at real quick. BP,
Yeah.
because I sold puts on BP yesterday at 34.50,
Right.
and you're not showing your iPad.
Oh, okay. I should do that. There we go.
So BP has dropped a little bit, but it's at 34.14. These puts are for next Friday. So this one going on, and I actually took a trade this morning.
Ooh, what do you do?
AVGO.
AVGO Broadcom. Okay. All right.
Yeah, so if you zoom out a little bit, I like this range before that last earnings pop and also before they had that split hype. You kind of have this range between 120 and 145. And so I saw that the 125 put was available. I sold the 125. I got 85 cents, 31% annualized. And this one, I liked it. And it was 10% below, the strike was 10% below the current stock price, which we haven't seen like those drop in percents on the wheel scanner and PowerX Optimizer. One of the filters is drop in percent. And I don't filter by drop in percent, but for a long time now, a typical drop in percent might be 1 to 3%. And we get back to 10%. That feels more like 2020, 2021 when
Yeah.
we were able to sell puts 10% below the market.
Yeah. And I mean, this because the volatility is exploding. So we're getting more premium here as option sellers.
Yep. Yep.
Yeah. And I almost forgot. I forgot to enter it here because I also have Merck. So Merck, I traded this earlier as an earnings play because earlier this week, it seems that it was dropping. So on earnings, I actually sold the 120 put. And even though today Merck is up 1%, I will get assigned on 120 in Merck, and this was an earnings play that I did earlier the week. Well, Merck kept dropping on earnings, has found a little bit of support, it seems, right now, if you're zooming in here a little bit. But we'll see. We'll see what happens here. So I definitely get assigned at 120. And then let's see if I can sell calls against my existing positions. Today, I mean, Merck was up at as high as 117, right now pulling back a little bit with the overall market.
Yeah. Hey, I have something quick. Don't get rid of the iPad.
I
Do you
won't.
want to take a look, do a 30-second review of some other stocks I was looking at today? If so,
Absolutely.
give the video a thumbs up. Does it? Nope.
Yeah.
Oh, hey. All right. So, rockstar moment. We're looking at some stocks that I was looking at this morning. CTRA.
Oh, just on the as
Yeah.
possibilities. Okay. CTRA as a possibility here to initiate a wheel trade. Ooh, I like
Yeah.
this.
So we did well with CTRA years past, and this one I thought looked good with support. Another one, BTU, something to consider.
Energy plays, huh?
Yep. BTU. I mean, this is where you might like Oxy a little bit better, but BTU popped up. Chevron, CVX. So
Oh,
I
right.
wasn't taking these because I am in Halliburton and then also traded BP, but I thought Chevron looked good. Nucor, NUE popped up. I thought that was decent.
All right. Yeah.
And then PPG also popped up. I thought looked decent.
PPG Industries, another basic materials, specialty chemicals. Okay.
So a couple of maybes for you.
Well, definitely tons of maybes today with the markets dropping and volatility spiking. I mean, this is just crazy. I think we're still trading at session highs here on the volatility. Look at this. Up more than 50%, scratching 60% here. Let's see if we can break the 30 today. We traded as high as 29.55. Looking at a 5-minute chart, of the S&P 500, still moving lower, although the move lower seems to slow down. In the Nasdaq, also, it seems that we might have found a bottom. The Dow still dropping, and also the Russell still trading at session lows. So, I mean, seems that we might get a little bit of buying going into this afternoon, but I wouldn't hold my breath. I mean, today, this just looks like a massive down day.
Yeah.
All right. We have been going super long, but there was so much to cover today, and we hope that you enjoyed it. Because if you did, do us a favor and give us a like. Really appreciate all of the likes. And if you are new to this channel, hit subscribe because you want to know what's happening on Monday. Are we bouncing back? And what happens next week with earnings weeks? What else is on the economic calendar? So you don't want to miss this. And if you feel that today's video was super helpful for you, then please click on share right underneath and share it with others. Really appreciate it. Well, with that, Mark, as you suggested, go ahead and have some wine with your bloodbath and then enjoy a good weekend.
Happy trading, everybody.